Silver has been the best performing commodity of 2016, and in appreciation of our listeners, Palisade Radio and Palisade Research are giving away a free American Eagle 1-ounce silver round each and every week for the rest of the year. Just visit palisaderadio.com and enter your email for a chance to win. Welcome back to another episode of Palisade Radio. Back on the show with us once again this month, Rick Rule, for our monthly update. Rick, thank you as always for coming back on the program.
A pleasure, Colin. I'm enjoying these series. Thank you.
I've had a lot of questions from listeners. A lot of our listeners come from the United States. As you know, it's been a problem for the last several years for U.S. investors to get in, at least on the same basis as a Canadian or offshore basis, into these private placements. There's regulations put in place by the U.S. government. Some of these private placements are not even available to U.S. people. If they are, it's very difficult for some people to find a place to deposit those shares. So I want to start off by asking you a general overview you use for U.S. investors on how to go about doing it.
Sure, and of course there's two parts about that: how to make the investment decision, which we can deal with later, and then how physically to complete the transaction. Mercifully, Colin, most small Canadian companies that don't accept American investors because they're incompetent, which means that most of the private placements that you can't get into as an American are not worth getting into because the management team doesn't have the skill set or can't afford the legal and accounting skills to include you. And it's important in private placement investing, as in any kind of investing, to choose the management team that you invest with well. If a management team is too unsophisticated to include private investors from a market that's 92% of North American capital markets, that is the United States, they're too unsophisticated to give you your money to anyway. So that's the first thing. Now, as to how, sometimes you have to help the company. In the first instance, you have to have the private placement available to you, which means that you have to be part of one or more networks of investors that get shown private placements. That can be through your brokerage firm. This is a commercial for Sprott. We're the largest distributor of Canadian private placements to U.S. citizens that exists in the world. But the other thing that happens is that to the extent that you, as an individual U.S. retail investor, have developed a fondness for a company and developed a knowledge of the company sufficient enough to cause you to want to invest in a private placement, you are perfectly within your bounds to call the company. You will probably first get the financial public relations or IR person, but you should ask to be transferred to the CEO or the CFO of the company and simply say to them, you're an emerging company, you're in a capital-intensive business. If you don't have any capital, you won't have any business. I know you're going to do a private placement at some point in time, and I want to be on your list. Now, that's the first step, getting access to the placement. The second step is, of course, affecting the placement. A couple things about this that you need to know. If you are issued private placement shares and you haven't taken care with the company to get the correct legend on the shares, you will be stuck with a 1-year hold, while your Canadian competitors will be stuck with a 4-month hold. And you need to negotiate this with the issuers, or your broker, or your arranger needs to negotiate with the company before your check cashes. After the company has cashed your check, their incentive to do what they need to do to get you to send them a check is much, much, much less. What you need is shares issued to you that are restricted from resale in the United States for a year or less. But you need specific agreement with the company that you will be able to have the legend stripped from the back of the security after 4 months if you sell the stock on Canadian exchanges and you have not been part of a prearranged sale to Americans. In other words, if you have not made an effort to condition or accept in the U.S. market a U.S. order for shares sold through a Canadian exchange. It's important, to the extent that you participate in these private placements, that you understand how to strip legends from certificates. If your broker isn't capable or isn't willing to do this, I suggest that you either switch brokers or you be prepared to spend about $300 per certificate with a Canadian securities lawyer.
Rick, backing up for a second, those of our listeners, many of them accredited and have plenty of money to participate, don't understand what a legend is. Can we define what a legend is and why it's placed on a certificate?
Yes, of course. When you buy stock from the Treasury, as opposed to in the exchange from a different investor, these newly issued certificates will be issued by the company to you through a transfer agent. The transfer agent, the trust agent, is responsible for documenting shareholder exchange. And newly issued shares, private placement shares, are issued with restrictions. And these restrictions from trading are listed on the back of the share certificate. And these are called legends. Legended certificates become free trading when the legends are addressed. And if, let's say that I owned 10,000 shares of Cattell Resources, and when Cattell Resources became free trading, I desired to sell 5,000 of them to recoup my capital. I'm assuming that this is done well in the aftermarket. And I surrender my cert for 5,000 shares to the transfer agent to make it, quote, good delivery or acceptable for trading. If I have done this in a manner that's acceptable to the company and the transfer agent, when the shares are sold and the certificate is transferred to the next buyer, that legend will have been removed. In other words, that restriction will have been removed because it will have been complied with.
For many companies that are modest size, meaning a market cap that's very small, they may be only partaking on a private placement financing for $500,000 or $1 million. I've seen you participate in these in the past. Obviously, you have to be selective. For a company like that, I know there is costs associated to them accepting a U.S. investor. There's extra legal work, at least. What goes in for a company to actually have to accept a U.S. investor?
It's actually what a Canadian company has to do to safely accept a U.S. investor is, first of all, hire a competent and reasonable Canadian securities attorney. Not all securities attorneys are cut of the same cloth. Most of them seem to have black belts in billing, but not all of them do sufficient work. A securities attorney that understands cross-border transactions can affect this transaction in very simplified fashion. We have found that a cross-border private placement should consume no more, and I mean no more, than 20,000 Canadian dollars. While 20,000 Canadian dollars is, 4% of a $500,000 issuance, the fact is that that's a very small price to be paid indeed for a company not merely to raise the first $500,000, but more importantly, to build a constituency, a U.S. high net worth retail constituency, which is probably the most stable funding constituency that small Canadian public companies have. Think of it as a franchise fee, Colin. The Canadian equity markets in bull markets exist with 20 institutional investors dominating the whole market. The problem with that is that they're all one-way investors. They buy during bull markets and they sell during bear markets. But the need for trading and the need for capital exists in all markets. And the most stable source of funding for small Canadian resource issuers is the high net worth U.S. retail market. So spending $20,000 to attract the first $500,000 from U.S. retail shareholders, and more importantly, building a retail constituency that will grow with your company over 5 years or 7 years or 10 years, is a small price to pay for a large leap up on the road to success.
Rick, let me not beat this question to death, but what is it about the U.S.? Is it a U.S. law that causes you to get a separate legend? I know that there's something called a 1933 legend. There's also other legends applied to U.S. investors that participate in Canadian private placements. Without going into all of the detail of how this happened, why is it that U.S. people are subject to these laws?
Yeah, it's the 33 Act that's most important. The SEC restricts aftermarket trading in privately issued securities, and the typical U.S. restrictive legend is 1 year. which means that American investors get a piece of paper, a piece of Canadian paper that has a 12-month legend, while Canadians have a 4-month legend. The way around that for American investors is to resell their certificate after 4 months in the Canadian rather than in the American markets. It's the U.S. government protecting U.S. aftermarket investors from abuses like issuing shares at a 25 or 30% discount to free trading markets and having them free traded. That was fairly common practice in the 1920s. And it was something that many U.S. retail investors objected to, so the SEC got in the way. It's a different way of saying that the SEC is protecting you from yourself now.
For those investors who are American interested in potentially working with Sprott, what products do you have to offer? I think that anybody investing in a private placement would have to be accredited, of course, for one. Can they work directly with yourself or your team, and how do they go about getting in touch and setting that sort of thing up?
Yeah, absolutely. Investors who are interested in private placement investing are, this is a market that we've served very well as Sprott for 30 years. It's a specialty of the firm. And we do it in a wide variety of ways, which we can, in some way, shape, or form, often tailor to the individual investor. Those investors who are interested in information associated with that should email me directly. My email address is rrule, R-R-U-L-E, @sprottglobal.com. And I will field the questions as best I can and respond with both information and strategies that are useful to the investors. I would also note, Colin, as I've said on your show on several occasions, our website, www.sprottglobal.com, has about 200 hours of instructional material with regards to how to go about investing, including a substantial part about private placements. And so for investors who aren't sure about private placements and don't want to talk to us in the interim, going to the website and familiarizing themselves with the educational materials that we have concerning private placements might be useful. But Colin, I think I've told you on several occasions, the speculator who is interested in the junior resource business and who is able to participate in private placements is really silly not to do it. There's two parts to a speculative market. There's beta and there's alpha. On the beta side of the business, I'm tempted to say for most investors, they're almost better off in a junior stock ETF because you don't have to do so much work. But the only way that you can consistently outperform the junior market, that is the only way that you can consistently generate alpha, is to get the leg up on other investors through private placements, and in particular through the utilization of warrants, which private placements commonly offer. The warrant, of course, being the right but not the obligation to make a larger investment in the company at a fixed price over a certain period of time. Remember that the purpose of a private placement is to provide the capital that allows a small company to answer an unanswered question and add substantial value. Understand also that no answers, that is failures, are more common than yes answers, that is successes. So the money that you make on your yes answers has to amortize your failures and leave room left over for an acceptable rate of return. And there's no more powerful tool than the warrant. The warrant is why you participate in private placements. And investors who want to outperform, that is people who want alpha, in addition to beta in junior markets, who don't utilize private placements, are doing their portfolios a grand disservice.
Switching subjects, Rick, in previous emails, in previous interviews, we've spoken about your past and what led up to you being the person that you are today. Of course, we started with you being a bouncer back in Vancouver, your rise to wealth, and afterwards some of the money being lost, of course, in the bear market, and how that shaped you as a person. What we didn't talk about, and what I've had some questions from listeners, is more of the near future. You getting involved with Sprott. Of course, you had a business out in California that got absorbed into Sprott, and I would just like, if you don't mind, to share kind of how that transpired.
Sure. Eric Sprott was, without knowing it, one of my mentors. He's about 10 years older than me, a little less than 10 years older than me. He would bridle at being called 10 years older than me. And he's followed a career path that has been useful for me for a very long time. And so I was a friend of Eric's, and unknown to him, sort of a stalker for a long time. And one of the things that I watched Eric do was when his money management business got to a certain size, he began to replace himself in the executive roles. And I guess by the middle part of the last decade, around 2005, 2006, I began to notice that my business was of sufficient size that I was spending more time managing the business than I was managing my clients' money. And that was problematic for me for two reasons. I enjoyed managing money more than I enjoyed managing a money manager, and I felt it to be dishonest. And so I began to look around for people who could manage my business and allow me to go back to managing money. And I got in contact with a young investment banker from Canada who I had respected for many years, a young man named Peter Grosskopf. He had formed Newcrest Securities, which he sold to TD Bank, and then gone on, ironically, to Sprott Securities, which became Cormark. I'd known him for a very long time and respected him. And I was having discussions with him about coming and running my business. Well, one day he called me and said, Rick, we have to discontinue our discussions concerning running your business because I've agreed to run Eric Sprott's business. I'm going to become CEO of Sprott Inc. Now, he said, there is one way that we could continue the discussion, and that would be if the ownership of your business changed and you would consider becoming a shareholder of Sprott and having Sprott own your business. And I thought about it for a couple of days, and given the fact that I knew and trusted Eric Sprott, and that this would solve precisely the problem with regards to management continuity that I had been contemplating, I agreed with at least the concept. It took us 4 or 5 months of negotiation to iron out the details and the price. But I have to say, other than marrying my wife, this is the best decision I've ever made.
You just spoke very highly of Eric Sprott. You're a wildly successful person yourself, as far as I'm concerned, and this question does apply to yourself, so I don't mean to put you in a secondary position by focusing on Eric for a moment, but take a person like Eric. He's the chairman and a major investor in several companies such as Kirkland Lake, obviously the head of several divisions of Sprott itself, and he has involvement in several other investments and businesses outside of those two. In your experience over the years of your life, how does a successful person, from your perspective, deal with the issues of time and management when they get to that level where they simply can't deal with those things anymore? And if they continue to deal with them in the same way, they're going to impede their growth moving forward.
Time management has become an issue for Eric again. He is extraordinarily busy. He handles it in several fashions. Eric has an unusual sense of what's important. There will be issues which might be important to other people but are not important to him, and he will simply tell them, I'm not particularly interested in this issue. Employ me where I can be of use to you. He is a wonderful chairman of Sprott in that he doesn't let meetings labor on ad infinitum. He believes that the failure to decide is a pernicious form of procrastination. But the truth is that if you are as interested and work as hard as Eric, that time management will always be a problem, and it's a problem for him. Partially for Eric and I, that problem is in one sense an opportunity because we're both so passionate that business, in addition to being our vocation, is our avocation. It isn't something that gets in the way of life. It's something that's a very important life. But in terms of the ability to allocate time and energy, I would say that the problem that you described is a problem that haunts both Eric and I. And I think it's probably an irresolvable conflict for an entrepreneur. To the extent that you begin to develop a little spare time, some passion intervenes and becomes an obligation, and you use up any time that you've spared.
I've always asked you questions in the past from your perspective, being the perspective of an investor or one who manages money for investors. And I want to turn it around for a second. You've kind of answered these questions in a way, but if the next 50 companies that are going to pitch you, and obviously it takes a few people to get through till they get your time, but if you're listening to this right now, these companies, what is it that these companies need to do in order to make a compelling sales pitch, and behind that sales pitch, a compelling business idea for you to want to invest in?
Well, I would suggest that they first go to www.sprottglobal.com and pull up a document that we did for this purpose, something to the effect of how to take money off Rick Rule. The other piece of information which is available there is 9 nosy questions to ask a junior resource company, because rest assured, if somebody is going to pitch me, I'm going to ask them my 9 nosy questions. If you distill it, what I want to know before anything else is, who are my partners? Who is running the business? And what specific expertise do they have that allows them to define for me the unanswered question which they propose to answer with my money? What you find is that you make money in emerging companies by stripping away layers of doubt that the market has concerning the ultimate success of the venture. And it's very important that the management team that is proposing to ask the questions know enough about the specific business that they're in, that you believe that they have asked the right questions and that they have proposed the right course of action to answer those questions. You also want them to have enough credibility that the market is going to care about their answer. So the correlation of management resume and management skill to the task at hand is critical. The second thing that I want to know is I want them to have a task at hand that's going to yield a big reward, because the probability in every individual speculative investment decision that you make is failure. That is, if you're an extremely good investor, 1 in 5 are going to succeed, and only 1 in 10 are going to exceed to any really, really acceptable level. And that means that since you're taking a lot of risk every time out, you want to be taking risks for very large rewards. When people tell me, as an example, that they're trying to find a small high-grade mine, I actually wish them failure, because success is where the problem starts. Everything that can go wrong with a big mine can go wrong with a small mine, but a small mine can never make you big money. So I want a big potential reward, and I want the skill sets of the people involved to be very, very directly attributable to the task at hand. You know, I've been a very successful deep value investor, a very successful natural resource investor, a fairly successful financial services investor. But Colin, you wouldn't want to employ me to analyze the media or entertainment business. You know, I don't go to movies, I don't watch TV, I can't even dress myself. You wouldn't want me to analyze a retail stock, because I'm not very good at popular culture and trends like that. The same thing happens when you are looking as an investor to somebody who's going to run a small public company. If somebody says to you, well, Colin, I've been a success in mining, and that success means that they were successful operating a gold mine in 2 billion-year-old, Archean terrain in rural French-speaking Quebec, and the part of mining that they propose to take your money for is exploring rather than producing. For copper-gold porphyries in 15-million-year-old tertiary volcanics in Spanish-speaking Peru, while both endeavors are broadly mining, they're so dissimilar that the success that they described is not applicable to the task at hand. So the curriculum vitae of the management team has to be very, very, very closely geared precisely to the skill sets required to propose and answer the unanswered questions associated with the task at hand.
Okay, my last question for the interview, and I know I've said this before and asked you multiple questions afterwards, but I watched a speech that my good friend Christoph Grizzard gave this morning in front of about 40 or 50 people, and he presented an idea I haven't heard before. You maybe have. It's from Robert Kiyosaki, who we've, of course, had on our program before, and it's called the Wealth Quadrant. And basically, there are two types of people in the world. On the left side, you have 95% of people that make up employees and small business owners. These are people that have to get up every day. They're leveraging their time to make money, and of course, since your time is finite, you can only make so much money. Those that truly become rich graduate to the right side of the quadrant, which is made up of two different people. You have large business owners, somebody like yourself, Eric Sprott, or you have somebody who maybe owns a franchise, something that is also leveraging your knowledge or your money to make a lot of more money. And these people, by basic rule, make up 5% of the population, yet control 95% of the wealth. I think this is a fascinating concept to try to wrap your head around. My question for you is basic comments on it, and of course, how did you transition from the left side of the quadrant to the right side? Because everybody who becomes successful has that transition.
I'm reminded of when Doug Casey was asked that question, how he became self-employed, and he described himself as unemployable. And it might be that I graduated to the 5% because I had no second choice. The truth is that I was entrepreneurial from a very early age, and I think it's. I would like to think it's because I'm extremely passionate and extremely curious. I hope it's not because I'm uncivilized or unemployable. As to the larger question with regards to the 95.5, I don't know if you're familiar with the work of Vilfredo Pareto, but Pareto was an Italian social scientist who first described performance dispersal curves and the widely held precept that 20% of the people do 80% of the work. Turns out to be, broadly speaking, true. It turns out across many social science disciplines that the observation has been made that 80% of the utility or accomplishment in any given task is accomplished by 20% of the population base associated with it. This is the sort of bell curve. The first thing to learn about the bell curve is that there's two lips. There's the good 20% that generates 80% of the utility, and there's the bad lip that generates 80% of the disutility. The second thing to understand, Colin, is that if the task and hence the population is large enough, that the performance dispersal curve runs for a second standard deviation, which is to say that if you take the good lip or the bad lip, either 20%, and you run it through the same performance dispersal curve, that it conformably aligns again, which means that 4% of the population does 80% of the 80%, in other words, 65% of the utility. That conforms in terms of wealth very closely to the 95.5 that you talked about. So I think it's true not just in terms of wealth. I think it's true in terms of various other social functions, knowledge, ability to teach. I think what you learn is that there are some people who have a facility for making money. And then there's a subset that have a facility for making a lot of money. And the truth is, Colin, that if you took that 5% subset that you defined, or the 4% subset that Pareto defined, and you ran it through a performance dispersal curve, you would find that it conformably aligned a third time. 1% of the taxpayers in the United States, as an example, pay 46% of the income and capital gains tax, and 1/10%, evidence of the performance dispersal, again going through a fourth standard deviation, are responsible for the payment of almost 30% of the tax in the United States. So I think that the observation that you made is absolutely accurate.
All right, Rick. Well, a leaving point for our listeners here. I know I have some YouTube trolls, and they'll tell me the quality of this interview is not up to HD recording standards. I apologize, as I'm in a hotel here in Portugal. I just want all of our listeners to know I have so much fun doing these interviews, especially with Rick. He's my favorite guest. So thank you to all of our listener base. And in appreciation, we're giving away a free 1-ounce silver round each and every week to our listeners. Just go to palisaderadio.com, input your email, and each and every one of you will receive a free 15-page report on silver investing. One lucky winner will get a free silver ounce sent to them each week. We just hit 5,000 subscribers on YouTube, which has been 3 years in the making, and we've got over 15,000 people through email. It's just awesome. Thank you for all the support. Rick, I just want you one more time, if you don't mind, to give your personal contact details for those U.S. investors interested in getting in touch with yourself and your team.
I will do that, Colin. And an extra incentive, any of Colin's listeners who email me, Rick Rule, that's rrule@sprottglobal.com, I will, as I have done in the past, do an absolutely no obligation portfolio ranking of the resource stocks only in your portfolio. Include the name and the symbol of the resource stock in the text of your email, not as an attachment, and I will email back a ranking of all the resource stocks, at least all the resource stocks that I know in your portfolio. In addition to that, I will personally answer inquiries from the Cattell listeners, Palisade listeners, with regards to private placements to the extent that I'm capable of doing it.
Rick, much appreciated. Thank you so much, as always.
Always a pleasure, Colin. Thank you. Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen? Or are you too stupid?